Michael, it's Rossio. We've seen financials weaker today in Europe. Interesting to know, Anthony Bolton from Fidelity, very well-respected and successful fund manager, believes that you need to get out of financials because he's concerned about how they've overlent to the private equity sector. What sort of flows are you seeing in or out of that European financial sector?
Well, I think what our flows tell us, Ross, is that all of Anthony Bolton's peers would tend to agree with him. We're now seeing institutions in Europe sell the insurance, groups sell banks, which represents about 25% of the European market cap. And we're also seeing weakness in the diversified financials spaces where you've got the investment banks. We're now underweight all of the financials groups. It's one that's been re-rated in the last number of years. Valuation is expensive. Earnings have performed very strongly in the last 3 years, and I think there are now doubts as to whether that earnings performance will continue in the future. So we share his view. We're now underweight financials as a broad sector.
Michael, it's Michelle here in the United States. We saw some of the retailers getting hit yesterday because of weak sales numbers and concerns about consumer spending. How do you feel about the retail sector?
Again, in a sense, surprised that the Walmart and Home Depot in the States, who had, poor results yesterday, weren't hit harder. In Europe, we're underweight the retail and the food retail group, so that covers the retail space in Europe. And again, within staples, we're seeing quite polarized behavior. We're seeing institutions continue to buy things like household products, which is, stocks like L'Oreal, but at the same time they are consistently and aggressively selling the retail stocks, particularly the food retail stocks.
Alrighty, Michael, good to see you this morning. Michael O'Sullivan, global strategist with State Street Global Markets. Coming up just a little bit later here on Worldwide Exchange, a little glamour by the sea at the Cannes Film Festival in France. We're there for the first day. Find out which films and which stars will be getting all the attention.
Yes, extra glamour to add to that provided by Michelle and Christine. Plus, after the break, we'll talk Asian strategy ahead of tomorrow's Bank of Japan's rate decision.
The FTSE Cnbc Global 300 is the index that never sleeps, tracking blue-chip companies from Shanghai to Singapore, Frankfurt to Paris, and London to New York. It's always trading and always tracking the trends that matter. If your business is global, your index is the FTSE Cnbc Global 300. Extend your reach with the FTSE Cnbc Global 300 Index, brought to you by Allianz. The FTSE Cnbc Global 300 Index is brought to you by Allianz. The FTSE CNBC Global 300 Index was brought to you by Allianz.
Tonight on US Squawk Box, new housing starts breaking ground for profits. Get first word on how the numbers will open doors for investors. Tonight at 6 on CNBC. CNBC, China Focus.
4,000 has now been conquered.
This is the strongest market we have in Asia at the moment.
Trading volume at a new historic high.
Retail investors have been a dominant force.
I think the Chinese markets are a bubble.
Goldman Sachs warning investors there might be a correction as earnings cannot justify the rally.
Why would you have an interest of talking the market down?
The index is up 50% on the year and up 19 of the past 22 trading sessions.
There's even more reason to move today when you look at the buildup of reserves.
Possibly a crash may be imminent.
This is a government that's going to have to take issue with the enormous rally we've seen in the market.
Can you quantify it?
Perhaps closer to 3,000.
CNBC, first in business worldwide. She's a financial advisor, and she's not afraid to tell it as it is.
You are making a bad mistake here.
Susie Orman will change the way you feel, think, and act about your money. The Susie Orman Show. Weekends at these times on CNBC.
16 minutes past the hour. This is CNBC's Worldwide Exchange. Let's kick off today's Global Stock Watch. And let's get straight into our Asian markets traded today with Adam Bhatia in Singapore. Adam.
Hey there, Christine. Well, North Asian markets make a big comeback after that huge sell-off in China yesterday that rocked the region. And today, the Shanghai Composite rebounds, almost wiping out all of those losses yesterday. And that helped to pull up the rest of the region, including the Hang Seng and the TAIEX. But the gains in the Hang Seng were capped after heavyweight HSBC warned of more bad debts at its U.S. consumer finance operations. Now, turning focus to Japan, we had the Nikkei 225 pulling itself out of early morning losses thanks to big gains in the auto exporter stocks as well as at the oil stocks. But the broader topics ended the day lower as traders were cautious ahead of the BOJ's decision on interest rates, which comes out tomorrow. Now, some of the stocks that were moving the markets in Japan, the drug makers traded higher after forecasting strong growth for this business year. And Sony rose ahead of its quarterly and final year earnings results, which came out after the bell, and I'll have more details on that for you a little later in the show. Now, the South Korean market rebounded as well, although traders say the market may not advance any further from here, given the Kospi has risen for 10 straight weeks, and there's some concerns that the market may be slightly overvalued. Now, that's your trading picture in Asia today. It's over to London with Ross.
Adam, thanks very much indeed for that. Bit of a mixed session right now for European equity markets. We know that banks on the whole have been weaker today. Credit Agricole a little bit weaker in Paris. ING actually, though, came out with fairly good numbers. So it is bucking the trend up there in Amsterdam. Fairly solid numbers out from the likes of ArcelorMittal as well, the world's biggest steel maker. Let's get some more details on some of those individual markets. We'll get over to Frankfurt in just a few moments' time. Patricia's there, but first to run us through what's happening in London, here's Martin.
Hi, Ross. Thanks very much. Just as you described, it is a bit of a mixed session, but actually we're starting to claw back at least close to flat to possibly to positive territory. We're down about 9 points right now after having drifted as much as 30 at the open. Largely that has been the market's been dragged down by a couple of things. First of all, we've had some mixed bags of earnings. Sainsbury, for instance, the UK's third largest supermarket, had a solid set of numbers, but disappointed investors in that it didn't decide to dip into its property portfolio and monetize out, which a lot of people were expecting. So that stock is off a little bit. HSBC, one of the largest banks in the world and quite a heavy weighting on the FTSE, is trading off, but that's largely because it's gone ex-dividend today. And of course, in the last couple of days, it's made some gloomy statements with respect to the damage it's taken in the subprime market in the United States. On the upside, however, what is lifting the market closer to flat at the moment is the fact that Vedanta, the Anglo-India miner, had a storming set of figures today. 145% rise in full-year earnings, 90% rise in profit, getting costs down, and really some bullish statements with respect to the outlook for the metals and mining market the rest of this year. That's lifting the entire sector. Rio, BHP, Lonmin, etc. Now, these, as you know, Ross, have been part of the M&A speculative comments and stories over the last 7 to 10 days. They have a decent weighting in the FTSE as well, so it's lifting the market up a bit. But we are going to wait now for the key quarterly inflation report at 10:30 London time to give full direction for the FTSE. So let's over to Frankfurt. Patricia Sarvis, my colleague, whom I'm always pleased to see what's moving the market over there. Patricia?
Ditto, thanks very much indeed. Well, the German market, not surprisingly, a little bit lower, down about 0.2%, just off intraday session highs, but we just don't seem to be able to get back above the 7,500 level. Yesterday we were above 7,520 at the intraday high. In terms of volumes, though, I have to say very low volumes indeed. Not even 21 million shares have traded. Main reason being tomorrow we do have a holiday here and everybody is just starting to fall asleep ahead of a long weekend, to explain it that way. In terms of gainers and losers, there are about 4 gainers here on the top performance list. Again, Daimler Chrysler being the main one at the moment. A couple of things here. We did have broker upgrades for Daimler Chrysler after the sale of Chrysler. Bernstein ups it to outperform. We did have Lehman Brothers increasing the price target to 72 euros from 67, and JP Morgan upping their price target to 75 from previously 60 euros. On the loser side, we do have BMW going ex-dividend down about 1.4%. Of course, the car makers were already in focus this morning because we did have retail numbers out for the month of April, and Daimler Chrysler down 4.6% was the absolute loser. In Europe, the star was Fiat, but also BMW had a nice increase to a book of 2.6%. Michelle?
Patricia, lots of economic news. Fed speakers' earnings in the U.S. today. 8:30 a.m. New York time. We have housing starts for April. They're expected to be down 2.2% for the month. 9:15 a.m. we get industrial production and capacity utilization for April. Economists there expecting a reading of 0.3% for production, 81.5% for capacity utilization. It is day 2 of the Atlanta Fed Credit Derivatives Conference in Sea Island, Georgia. Fed Governor Donald Cohn and Philadelphia Fed President Charles Plosser will both be moderating a panel. Fed Governor Randall Kroesner speaks on globalization and capital markets. That's in Argentina, 11 a.m. New York time. And Dallas Fed President Richard Fisher speaks on globalization and the economy at 1 p.m. in Fort Worth, Texas. And then on the earnings front, Dow component Hewlett Packard expected to report second quarter earnings after the bell of 69 cents a share. We're also keeping an eye on Deere, Federated Department Stores, and PetSmart. That's your Global Stock Watch. It is available only on Worldwide Exchange.
Well, Chinese shares staged a rebound after Tuesday's sell-off. Investors have ignored hawkish comments coming from Chinese Premier Wen Jiabao, who revealed that Beijing will use a full range of tools to rein in fast money growth in the world's fourth largest economy. Nico Haraji, Managing Director, K1 Fund Distribution Limited, joins us. Nico, good to have you with us. Does it sound like Premier Wen is preparing the market for another rate hike?
Well, welcome, and it's good to be here. Thank you for having me. Well, we do think that People's Bank of China are looking to increase interest rates by around 27 basis points. We think they're doing this in order to to lower supply growth and the lending rate, and obviously also to stop the easy money and going into the capital markets. However, we, in terms of the valuations of the Chinese stock markets and the bull run, we don't think that this will have a long-term impact on the bull run of the Chinese equity markets. We still think that investors have too much money on the sidelines and will continue to invest in the Chinese equity market.
Some people are suggesting the central bank should instead hike deposit rates as opposed to lending rates. Do you think that would be more effective?
Well, I think that would be more effective, but I still think just by hiking 27 basis points is not going to have a long-term impact. As I think the short term, yes, and I also don't think that it will really increase the yuan, the Chinese yuan. I think it will maybe appreciate steady, but it won't have any very quick movements to the economy.
Nico, it's Michelle here in the United States. I was just going to ask you about that because the Premier says that he is satisfied with the pace of yuan appreciation, but how's that going to go down in Washington when we have this trade delegation going on right now? What do you think?
Well, I think that, obviously the UN and the US, they would like to see that an increase in the yuan, and they would like to do something about it, and they are suggesting that the yuan is being kept down synthetic. But on the other side, what is US and UN going to do about it? Are they going to implement or import taxes? I don't think so. And if they would do that, you shouldn't forget that China is one of the largest buyers of US securities, and they might start selling that.
So Nico, and what is your strategy at the moment? There may be concerns of a bubble, but look at the industrial orders data out of China, and there's no sign of a slowdown there really at all. And what are you doing with your money?
Well, right now, what we are saying is that we would still suggest to invest in hedge funds. And as I said before, I think now is the best time of all. We are seeing such high valuations, and we do think that it's going to be a correction around the corner. We don't know when and how it's going to be triggered. We think it could be the carry trade, the housing markets, or even some geopolitical tensions. But if investors want to place their money right now, we would suggest to invest in Asian demand strategies, such as maybe phone companies or even properties, as opposed to the exporting sector.
Nico, Christine here again. When you look at A shares and how it's been trading compared to H shares, say, in Hong Kong, there's a big discrepancy going on right now. Do you expect the gap to narrow?
Well, we certainly do, and we think that there will probably come a lot more inflows into the H shares through equity funds, and then we think that the gap will narrow between the A and the new H shares.
What exactly do you do with your money in Hong Kong then? Do you play just the H share market, or do you look elsewhere?
Well, we as K1, we don't invest directly into equities. We do look at only at hedge funds, and we were looking at some long-short equity managers with, I would say, with a bias towards shortening stocks. And that could be across the board, Japan, China, and Hong Kong.
Okay, Nico, we'll have to leave there. Thank you very much for being with us. Nico Harachi, Managing Director, K1 Fund Distribution Limited, talking to us live from Hong Kong. Coming up next on Worldwide Exchange, looking at the US CPI data coming in lower than expected. What's that?